Greetings, and welcome to the High Flying Test Academy channel. Today, I'll be helping you on answering some questions based on ratios, accounting ratios, right? So this is our question where they say the following information was taken from the books of Demdem Traders on the 31st of December 2019, and we are given all these balances or information right there. And the required part, you are going to prepare the following ratios. You are required to calculate the following for 2019: current ratio, acid test ratio, inventory turnover rate, debtors collection period in days, gross profit percentage, and 1.6. You are required to comment on the current and the acid test ratios, right? So let's see how we're gonna do this. Remember, or let me say this, on the comment, you need to look at what is the acceptable ratio for that particular ratio that you are required to comment on. What is the purpose of that ratio? And looking at the calculations that we've made, did it reach the purpose or it failed the purpose? So you need to look at that, all right? Just to advise. So let's proceed. I'm going to be calculating all these ratios with you right here. Based on the information provided, you are required to only calculate the ratios for 2019. Only 5 ratios, which is the current ratio, acid test ratio, inventory turnover rate, debtors collection period in days, gross profit percentage, and then you are required to comment on the current ratio and the acid test ratio. Right, so let's go to our answer sheet right now and go and calculate our ratios starting from 1.1 current ratio. So here is our answer sheet. We're going to answer 1.1 current ratio, and then we need to start with the formula first. You need to start with the formula first before you do any calculations. So what is the formula to calculate current ratio? So the formula for current ratio is total current assets, total current asset is to total current liabilities. All right, so that is the formula on how to calculate current ratio, right? So number one, after getting the formula right, we need to after getting the formula right, we need to do the calculations, right? So now let's calculate this. Let's calculate this. Total assets and total current assets and total current liabilities. Let's go to our information to check, right? So as we check on our information provided, we've got bank for 2019. We've got bank current asset, which is 307,800. That is the number one current asset. Remember, we need the total, so we open brackets 307,800 plus we're going to check other current assets right there until we get the total current assets, right? So we've got what? Our debtors of 114,300 plus 114,300, right? Plus we've got another current asset there, which is our inventory of 261,000. 261,000, and we no longer have any other current assets, so we only have those three, right? So we're gonna add 261,000, and then we close brackets. We say is to our current liabilities. So let's go and check our current liabilities. So let's go and check our current liabilities. Let's go and check our current liabilities. So our current liabilities, we have creditors, and we have no any other current liability there. So it means we only have one, which is 178,200. 178,200 is this one right there. 178,200. Right, so we go to our answer sheet. We say is to 178,200. That is our current liability that we have. All right, and then from there we need to calculate our total current assets. So we are going to add everything right there. Go into our calculator. Go into our calculator right there. Go into our calculator right there. We have to say 307,800 plus 114,300 plus 261,000. I'm getting 683,100. I'm getting 683,100, and then it's gonna be is to 178,200. That is now what is our final calculation. Our final calculation right there is going to be 683,100 divided by 178,200, and I'm getting 3.83 is to 1, right? That is your ratio, right? That is your ratio. Okay, that is your ratio right there. All right, and then we are done with calculating current ratio. We are done with calculating current ratio. We can go to the next ratio. The next ratio is 1.2, 1.2, 1.2, which is going to be right, and then let's do this. Okay, 1.2. So 1.2, we are required to calculate. Let's see on our information right there. 1.2, we are required to calculate acid test ratio, also known as quick test ratio. Acid test ratio or quick test ratio, right? So acid test ratio, right? Acid test ratio. Acid test ratio right there. All right. So what is the formula? What is the formula for acid test ratio? Acid test ratio formula is equal to, or it's let's do this quickly. All right, is total assets okay, no problem. Is total assets, I mean total current assets, total total, and the formula is equal to total current assets minus inventory. All right, and then you is 2 or divide by total current liabilities. Total current liabilities, all right, and then from there we need to go and get our total assets. So our total current asset is given, right? We've calculated it right there. Is it's equal to 683,100, right? And then you minus your inventory, which is going to be inventory. Our inventory, let's just check on our information there. Our inventory is 261,000. So let's go right there. And then remember, when we do our calculations, let's put brackets. 683,100 minus 261,000, right? Put brackets, is 2 or divided by total current liabilities, which is 178,200. All right, and then now as we proceed with the formula, we have to calculate our total current assets minus inventory. How much is the answer? So it's going to be 683,100 less 261,000. Okay, and then I am getting 422,100. 422,100, and then divide by or is to 178,200. So how much is the ratio right there? What is the ratio right there? So the ratio would be 422,100 divided by 178,200, which is equal to 2.37 is to 1. All right, that is the ratio. That is the ratio right there. That is the ratio for acid test ratio. All right, so we are done with our acid test ratio calculations, and we are going to the next one, which is going to be 1.3. So 1.3, let's see what are we required to calculate right there. 1.3, you are required to calculate inventory turnover rate. Inventory turnover rate. Inventory turnover rate. Inventory turnover rate. All right, so inventory turnover rate formula. Inventory turnover rate formula. Remember this ratio, right? For better understanding, this ratio for better understanding is going to be in times, right? It's going to be in times. So why are we saying it's going to be in times? Because it's the ratio that shows how many times an entity has sold or replaced its inventory during a given period, right? So let's go and see how do we calculate this. What is the formula? The formula is going to be cost of sales. The formula is cost of sales. Cost of sales cost of sales divided by average average inventory. Average inventory, right? So now how do we calculate this? Now that is the formula, cost of sales divided by average inventory. So let's calculate this ratio after getting the format right, okay? So now we are going to look for cost of sales in our provided information. So our cost of sales right there is given 353453, right? So let's see that. Let's go to our answer sheet. Our answer sheet right there, we're going to say cost of sales of 353 453 divided by average inventory. So average inventory, you open brackets there, you're going to take the inventory for the current year, inventory for the previous year, or opening and closing, you add them, you divide them by 2. So let's do that quickly. So our inventory opening, how much is it? Our inventory opening is 233,000, right? There you go. Our inventory opening is 223,000 plus our inventory closing. So our inventory closing is 261,000. So let's go to our answer sheet. 261,000. We close brackets there, we divide by 2. All right. So let's go. And then we proceed with the calculations. 353 divided by the average. So the average, let's calculate the average. The average is going to be 223,000 plus 261,000 and then divided by 2. I'm getting 242,000. 242,000. How much is the answer? Your answer must be in times. So let's see. So it's going to be 353 as we proceed with our calculations. 453 divided by 242,000. So I am getting 1.46 times. So it's going to be 1.46 times. Because remember I said this inventory turnover ratio shows how many times an entity has sold or replaced its inventory during a given period. So that is why we put the number or the ratio in times. Then please always remember that you need to indicate it in times like this. You don't want to find yourself not putting these times, but you've got correct answer of 1.46 and then you are not getting the mark for that. You just missed times. It's going to be very, very much disappointing, and for losing marks like that, whereas you know the answer. So please do the right thing. All right, and then let's proceed to the next ratio, 1.4. Right, so 1.4, let's see what are they requesting us to calculate right there. 1.4, they say to you, calculate the debtors collection period in days. Debtors collection period. Debtors collection period. Debtors collection. Debtors collection period. Debtors collection period, right? Also known as, for the new terminology, also known as account receivable period, or you can say trade receivable period. That's another term. All right, so I don't want people to get lost here. All right, so debtors collection period or account receivable period in days. What is the formula for this? What is the formula for this? What is the formula for this? The formula for this one, right? What is the formula for this one? Is going to be average debtors or average account receivable. So average, the formula is average debtors, divided by credit sales multiplied by 365. Remember, you're calculating in days, the period in days, so multiply by 365 days. All right, and then now, how do we calculate the average debtors or the average account receivable? All right, so it's equal to, right, you open brackets. Remember, you need to get the average debtors first. So your average debtors, let's see, we're going to check the debtors from the previous year and the current year. So the previous year debtors is 122,300 and the current one is 114,300. Let's go and do that quickly. So you are going to say 114,300 plus plus the previous year's data, which is 122,300. So let's go there quickly. It's going to be 122,300. Those brackets divided by 2, right? Divided by 2. And then we also gonna divide all of that by credit sales. So what is our credit sales? Our credit sales, let's go and check. Look for credit sales in our information. We've got sales there, and then they say all on credit. So all the sales are on credit. So we're going to divide by the current sales of 2019 because we are doing the ratios for 2019 of 616, 680. So let's go and divide by that. So it's going to be 616, 680. Right? And as we proceed with the calculation, let's get the average first. Let's get the average first. So after getting the average, we'll proceed. So average, our average, let's see how much is going to be. Our average is going to be 114,300 plus 122,300 as well. And then and then you divide by 2. I am getting an average of 118,300. 118,300, that is our average. You divide by let's put 365 right there, and then you divide by 616, 680, multiply by 365. You follow the formula right there, and then how much is your period? How much is your period? So you're gonna say 118,300. You divide by 616, 680, multiply by 365 days. You get 70 days. You get 70 days. You must also indicate 70 days. As much as I explained that you don't have to get 0 or not being awarded a mark because you missed just to say days. So make sure that your answers when it comes to the periods are in days. All right. So we are done with 1.4. Now we are going to the next question, which is 1.5. And 1.5, they say calculate the gross profit percentage. Gross profit percentage. Gross profit percentage 1.5. Gross profit percentage. gross profit percentage. Gross profit percentage, right? So always we start with a formula, always, because sometimes you find these formulas have got marks. So you need to make sure that the formula is outlined before you do the ratio. And make sure that you follow the formula to get the correct answer. All right. So here we're going to say equal to, we're going to start with the formula, and then the formula is going to be what is the formula there? It's going to be the gross profit divided by net sales multiplied by 100. All right, that is the formula. And then now let's go and calculate our gross profit or determine our gross profit in the provided information right there. All right, in the provided information right there. So let's do that quickly. So I'm gonna say it's equal to, and then we go and check our information right there. And then we don't have our gross profit, but it means we need to know how to calculate our gross profit, because according to the information provided, we don't have gross profit, but we've got an information or items we can use to calculate gross profit. So our gross profit is equal to sales less cost of sales, right? And we've got our sales of 616,680. So we go there, we follow the formula, remember, open brackets, 616,680 minus our cost of sales for the current year, which is our 2019 year. How much is our cost of sales? Is 353,453, right? So let's do that quickly. It's going to be 353,453, right? And then divided by our net sales. Our net sales, remember, our net sales, how do we calculate net sales? Our net sales is equals to the sales less sales returns or debtors allowances. But in this information, we don't have debtors allowances or sales returns. That's why we're not applying that. We're just going to take sales as it is. All right. So let's proceed. I just wanted to clarify that one. So it's going to be divided by 680, right? You multiply by 100. I know some of you divide by 1, no problem, still fine. And then now let's get our gross profit. So our gross profit is going to be our 616,680 less our cost of sales 353,453, right? And I am getting a gross profit of 263,227, right? Divided by 616,680. Then you multiply by 100 and divide by 1. Those who divide by 1, the answer will still be the same. All right. And then let's see, 263,227 divided by 616, 680, I mean to say, how much I multiply by 100? I am getting 68%. That is your, remember, you must also indicate this percentage sign, because you don't want to find yourself losing marks because you didn't indicate these are in percentage. Please, right? Always remember this. Always remember this. And then there we go. And there we go. All right. And then we are done with all the calculations, right? Then we go to 1.6. 1.6. Let's just do this. 1.6. Okay, so with 1.6, they say comment. You need to comment. You are required to comment. They say comment. Comment on current ratio and acid test ratio. Acid test ratio. Right? So now, I don't know if I must help you on this one because it's a matter of understanding. What does the ratio deal with? So now, remember I said when you want to comment, number one, you're going to deal with whether the ratios are acceptable, what are the purpose of those ratios, and did the ratios according to your calculation meet their purpose. That's how you comment. So I don't know if you hear me. So let's see, what can we say? Because remember that on the current ratio, remember they are all liquidity ratio, and the acceptable ratio for current ratio is 2:1, right? And remember, when we do the current ratio, we just want to analyze and check if the business can be able to pay their current liabilities using their current assets, right? And based on the acceptability, we can see that the current ratio is 3.83:1, is even more than the acceptable ratio. Therefore, the business can be able to pay their current liabilities using their current ratio. All right. And then the quick test ratio or the acid test ratio is to check if without inventory, can the business still be able to pay their current liabilities from their current asset without inventory. I don't know if I make sense. So you need to comment based on looking at the calculations, one, looking at the purpose, if the purpose of the ratio has been qualified or not. So let's see. And remember, when you comment, you can look at the acceptability, one. Number two, look at the purpose and check according to the calculations that we have if it has reached the purpose, and you comment. So when you comment, remember, you can just say both current ratio, just for example, right? This is my English. You're gonna come with your own, because you know in the test you need to think for yourself, right? So now I'm just trying to help you here. So you can just say both ratios. Let me remove the bold. You can say both ratios are much higher or more, or much more, just say more, a much more than their acceptable, much more than their more. Both ratios are more. I'm trying to combine the English, Both ratios are much more than their acceptability. See now English again. Are much more than the acceptability. Are more than their acceptability. And what? Of acceptability of 2:1 and 1:1. Remember, 2:1 is for current ratio, and acid test ratio 1:1. Those are acceptability of these ratios, right? And then when you proceed, you can say which indicate. Remember, I say you must state the acceptability and if they've reached their purpose. So which means that the business or the company will be able to pay their short-term liabilities or their current liabilities, their short-term liabilities or their current liabilities short-term liabilities or debts when they are due. Right? So that is my English. I'm trying to, I don't want to come here and then do a video and then my English is not make sure. So I don't know if it makes sure though, but I believe you will try to understand what I'm trying to say right there. So I'm saying both ratios are much more than their acceptability of 2:1 and 1:1, which means that the business will be able to pay their short-term debts or liabilities when they are due. So this is my understanding, and this is how best I can explain this ratio. But you need, as a student, you've got that responsibility, or as a learner, you've got that responsibility to go and study the theoretical part of all these ratios so that you can understand and know how to comment. Remember, I said to comment, you are going to check on whether is it acceptable. You're going to check on the acceptability of the ratio. Number 2, if it has reached its purpose based on the calculations, right? You can also state that the calculations that I have is this and this. You can also indicate in the comment. When you comment, you can also indicate there the ratios, right? But obviously they are there. So this is what we were requested to do, and I believe this will help you. And please do not forget to subscribe, like, and share. And remember, we offer private lessons. We offer private lessons at a cost. So if you are interested, you can put a comment on these ratios. You can put a comment right there, and I will attend it to you if you need the private sessions. And please do not forget to share this, and please do not forget to subscribe. Thank you, and this is your channel, and salute.